Hello, welcome back to another MQ Trader video. In our last video, we uncovered the secrets of the turtle strategy. Today, we're taking it a step further and showing you how to apply this powerful strategy in the MQ Trader system. Get ready to supercharge your trading activity with the turtle strategy. Let's dive into the details of the MQ Trader system. We offer two fantastic signals for the turtle strategy: Turtle System 20 and Turtle System 55. Turtle System 20 uses a 20-day average to follow trends. If the market price breaks above this average, it signals a buy. It's a short-term approach focusing on 20-day moves. Turtle System 55, however, uses a 55-day average, making it suitable for a long-term strategy. Now, let's get practical. We'll use Maybank as our example and focus on Turtle System 20. To enhance our analysis, we can also employ additional support indicators for better accuracy. First, keep an eye out for any buy signal under Turtle System 20. Once we spot a buy signal, we will run a backtest by clicking on it. Afterward, you will see a lot of information in this backtest result, and now we will explain how to read this backtest result, part by part. Part 1 is the total signal, which means that from the 31st of December 2018 to the 2nd of October 2022, the system captured 15 signals. Part 2 is the winning-losing rate. Out of these 15 signals, 8 hit the target, and 7 missed the target, resulting in a winning rate of 53.33%. Typically, we would select signals with a winning rate above 50%. However, if the winning rate is close to 50% and other information indicates reasonability, we may still consider it. Part 3 shows the risk and reward levels. The best and worst results represent the highest return and loss for a single trade out of 15. Additionally, the best and worst accumulated results are shown if you follow all the trade conditions and execute the 15 total signals. The best accumulated result achieved is 6.04%, while the worst result reached is -1.52%. The best accumulate result illustrates the long-term performance of the signal from the beginning, while the worst result indicates the potential maximum risk on a single trade. Therefore, we can understand both the overall long-term performance and the potential individual losses. The current profit and loss, displayed in Part 4, stands at 4.87%. The difference between the best and worst accumulated results is the measure of volatility. Part 5 displays historical exit criteria information. If we observe that most exits occur at 1% loss, we should avoid this signal. This is because the probability of experiencing losses in a single trade would be higher than the likelihood of winning. The benchmark criteria should require the probability of gaining 3% to be greater than the probability of losing 1%. Additionally, the combined probability of T plus 5 and gaining 3% must exceed 65%. Remember, Turtle Strategy 20 and 55 is a trend-following approach. Therefore, we will only execute both strategies on uptrend counters. As long as the price keeps rising, you can hold onto the shares. The trend lines of Turtle Strategy 20 will resemble a staircase pattern. However, when a sell signal emerges, discipline is key. Stick to the rules and execute your take profit or cut loss strategy. Now, let's witness the turtle system in action with real-life scenarios. First of all, we will analyze the share price trend, as the turtle strategy is a trend-following strategy. In this case, we will use the EMA 5, EMA 20, EMA 60, and EMA 100 to identify the counter that is experiencing an uptrend from the short term to the long term. We observe that the share price has crossed above the EMA 5, the EMA 5 has crossed above the EMA 20, the EMA 20 has crossed above the EMA 60, and the EMA 60 has crossed above the EMA 100, indicating the formation of a short-term to long-term uptrend. Now, let's delve into an additional tool at our disposal, the MQ Technical Screener, available on the MQ Trader Stock Analysis tool. This useful feature assists you in sifting through and identifying uptrending counters. Simply follow these settings, and you can effortlessly filter out those counters on the upward trend. Let's get back to the topic. There was a Turtle Strategy 20 buy signal on March 22, 2023. After conducting the backtest, we also noticed that the results were acceptable. The total signal base is high, The winning rate is near 50%, and the trades are not considered risky based on the past 22 signals. Therefore, we will follow this buy signal as an entry point, which is RM 8.15. As mentioned earlier, the turtle strategy is a trend following strategy. Therefore, we will have two exit points. First, a sell signal occurs, or second, the EM trend line turns into a downtrend. In this case, both exit points occurred simultaneously on May 22, 2023, at RM 8.40. In the end, the profit is RM 8.40 minus RM 8.15 equals RM 0.25, which is also a 3.07% profit. Next, let's take a look at Astro as our next example. The Turtle Strategy 20 is triggered, but it does not have a short to long-term uptrend when the buy signal occurs. Let's proceed with conducting a backtest first. The winning rate is 50% with a total of 18 signals, which is acceptable. However, the difference between the best result and the worst result is too significant, indicating that this counter is quite risky. Furthermore, the exit criteria show that 38.89% of trades will exit due to losses of 1.00%, meaning this counter is likely to hit the loss criteria easily. If we still choose to follow this buy signal and place the order, let's see what the result will be. We bought it at RM 0.695, but since the trend is unfavorable, we decided to sell it following the sell signal at RM 0.650. In the end, the result was RM 0.650 minus RM 0.695 equals negative RM 0.045, which represents a loss of negative 6.47%. Let's try one more example, Hibiscus. We will examine the two latest buy signals with the Turtle Strategy 20. Now, let's see what happens if traders enter these trades. The first buy signal occurred on January 20, 2023. From the backtest, we have determined that the winning rate is not good, and the exit criteria often result in a loss of 1.00%. If we follow the buy signal to enter and the sell signal to exit, we would incur a loss of negative 4.55%. The second buy signal occurred on April 11, 2023. From the backtest, the results are even worse than the first buy signal. If we follow the buy signal to enter and the sell signal to exit, we would incur a loss of negative 4.67%. Through the example, we have understood how to study the backtest result and implement the Turtle Strategy. But what's different between Turtle Strategy 20 and Turtle Strategy 55? Turtle Strategy 20 is a shorter period indicator more likely to capture short-term trends, resulting in higher trading frequency. It may enter and exit the market earlier and is more prone to market fluctuations. Turtle Strategy 55 is a longer period indicator that provides greater stability than market fluctuations, making it more suitable for capturing long-term trends. It may enter and exit the market later but has a lower trading frequency and higher filtering capabilities, allowing it to filter out some short-term price fluctuations. Now we will use AJI as our case study. From April 1, 2022, until May 31, 2023, the Turtle Strategy 20 captured a total of 4 signals. The average winning rate for these 4 backtest results is approximately 30%. Out of these 4 signals, 2 signals resulted in losses, 1 signal showed break-even or losses, and 1 signal yielded a profit. This is because the Turtle Strategy 20, being a shorter period, is more prone to capturing signals but is also more susceptible to noise. Let us now examine Turtle Strategy 55 within the same period. The Turtle Strategy 55 captured a total of 2 signals, with an average win rate of approximately 57%. Out of these 2 signals, 1 resulted in a profit while the other incurred a loss. The Turtle Strategy 55, being a longer period indicator, requires more time to validate signals and filter out noise. Both strategies use the same concept but are implemented under different models of strategy. You should choose the Turtle Strategy depending on your own trading style. If you're looking to analyze the short-term trend over a 20-day period, you might consider employing the Turtle System 20. However, please note that the effectiveness of this approach is contingent upon the trader's specific trading system. There is another question for us to consider. Why must we follow the sell signal in MQ Trader? Why is it so important for our trades? The core idea of the turtle system is all about following trends. A buy signal occurs when prices break through the average true range and move up a tick for each breakout of the average true range, forming a stair pattern. Therefore, the sell signal will be triggered by a trailing loss, which also follows an upward tick-by-tick movement. The sell price will also increase based on this formula. New stock price equals previous stock price plus half N, as we mentioned in the previous video. Therefore, this is the reason why we always maintain discipline and follow the sell signal to exit the position, whether it results in a profit or loss. When the sell signal occurs, it also means that the trending pattern has been broken, and the uptrend is no longer maintained. At this moment, exiting the position is the way to minimize our risk. According to historical results, the majority of the share price will continue falling when the turtle system sell signal occurs. When the stock is on a bullish trend, the share price will generally drop and rebound afterward. However, if the stock is on a bearish trend, the share price will drop continuously. Sell signals can help traders to minimize their risk from losses. As traders, our main goal is to keep our precious capital safe and secure. This way, we can use it wisely to make even more money and achieve greater financial success. Moreover, to further enhance your success rate with the turtle strategy, we recommend incorporating additional indicators. In the example, we used the EMA5, EMA20, EMA60, and EMA100 to help determine the trend before considering the turtle strategy signal. In addition to analyzing the trend, you can explore other signals such as EMA5 crossover, MQ volume breakout, ADX crossover, OBV breakout, and more. Select one or two signals with suitable backtest results to enhance the accuracy of your buy signals. The backtest results should align with your own risk preference. In conclusion, mastering the turtle strategy involves knowing when to enter and exit the market, ultimately minimizing risks. Here's the key takeaway when we use turtle strategy to trade. First, we will only use turtle strategy on the uptrend counter as it is a trending strategy. Second, to minimize the risk, we will study the backtest results. For example, we will look at the winning rate, which should be at least 50%. If the overall result is good, even if the winning rate is just near 50%, we will still consider it. We will also examine the worst results to assess the worst-case risk scenario. Additionally, we will check the historical exit criteria, as mentioned previously. Third, we will follow the trendline reversal or the sell signal as our exit point. Last but not least, always stick to the first to third rules. Stick to these rules for consistent success. Try out the turtle strategy on the MQ Trader system now, and sign up for a free trial version. If you enjoyed this video, please remember to subscribe, like, and share it. We appreciate your feedback, so feel free to leave a comment, letting us know which topics you're interested in hearing more about.